So Bitcoin is a hedge against inflation. Now, that will turn into inflation if the reserves on central bank balance sheets, which are the kindling for inflation, if they're lit. And that means if bank loans go crazy to the upside. We're seeing a share shift when it comes to loans into DeFi. So, there's a big, I think the banks have a big problem. They're losing talent to crypto, so they're having to raise wages to attract talent. And they're losing business to DeFi. Lending and saving, a lot of it is taking place in DeFi right now.
Bitcoin Miami 2022 is still in full swing with the industry's best like Cathie Wood, Michael Saylor, Max Keiser, Jack Mallers, and Kevin O'Leary breaking down complex ideas into exciting prospects for investors. Since it started on April 6, tens of thousands of people have been flying into Miami to listen to great and exciting ideas about the future of global reserves, finance, money, investments, and many other sectors. Apart from the thousands of participants and hundreds of speakers, the conference has also attracted major media houses from around the world. One of them is the American cable news channel CNBC, which briefly interviewed Cathie Wood, the founder, CEOs, and CIO of asset management firm ARK Invest, just outside the venue. In the interview, Wood mentions that her firm was the first public asset manager to get exposure to Bitcoin when it was only $250 in 2015. Since then, it has grown to an all-time high of $69,000 in less than a decade. Wood adds that even with such insane growth, the asset has only just begun. Let's now listen to Wood's interview with CNBC, but before we do, please click the like button and subscribe to the channel. Enjoy.
You've really become known for your contrarian views when it comes to equities. Is Bitcoin a contrarian investment at this point, or are you feeling like it's becoming more mainstream?
Well, we were the first public asset manager to gain exposure to Bitcoin in 2015 when it was $250. I think today it's $44,000, and we think it's just begun. But I don't think most institutional investors are positioned the way they ultimately will be. A lot of retail has really led the charge here. They, like with our other funds, the retail investor, the individual investor, those people with one foot in the new world, they get what we do. They get Bitcoin. So I think institutions are coming along slowly.
Well, one of the undercurrents of this conversation too is the Fed and central banks.
Yes.
How does that affect Bitcoin and prices?
Well, again, many people think monetary policies around the world have been unhinged, especially since 08, 09. And they're seeing extreme increases in the monetary base, various monetary bases around the world. So Bitcoin is a hedge against inflation. Now, that will turn into inflation if the reserves on central bank balance sheets, which are the kindling for inflation, if they're lit. And that means if bank loans go crazy to the upside. We're seeing a share shift when it comes to loans into DeFi. So, there's a big, I think the banks have a big problem. They're losing talent to crypto, so they're having to raise wages to attract talent. And they're losing business to DeFi. Lending and saving, a lot of it is taking place in DeFi right now.
I do want to ask you about regulation as well. Janet Yellen gave a speech about crypto earlier. We've seen some movement in Washington, D.C. when it comes to cryptocurrency, the executive order. What are you seeing as far as politics in Bitcoin and crypto? And is it bipartisan at this point?
Well, what we're seeing is 180 degrees different today than it was a year ago when Janet Yellen, it was roughly a year ago, Janet Yellen said, Bitcoin, environmental problems, illicit activity, money laundering, gambling, all of that. And she just, door shut. And I remember I was asked at the time, and I basically said, she hasn't studied it. She hasn't studied the technology, and she hasn't studied the instrument, the new asset class. Well, it seems like she's been boning up because, again, just the other day, she focused on Bitcoin and crypto generally as, we need to make sure and encourage financial innovation. The U.S. wants to lead, just as it has with many other innovation cycles. And I said to Yassine El-Mandra, our crypto analyst, I said, who's whispering in her ear? Because we began to hear other policymakers on both sides of the aisle talk in this way. And in talking to Michael Saylor earlier, He thinks it's Gary Gensler. Gary understands Bitcoin. He taught about it at MIT before he became chairman of the SEC, and he understands how profound this innovation is. First, global, private, meaning non-government, but it is open source, so public in that sense. Digital, rules-based monetary system ever. So it's a very big idea, and we do not want to be left behind.
In other news, the United States Securities and Exchange Commission has approved another Bitcoin futures ETF. The Contrarian Bitcoin Futures Fund is the fourth Bitcoin futures ETF to be approved by the Commission, following ProShares, Valkyrie, and Van Eck funds, which began trading late last year. Contrarian Trading is a Vermont-based firm that previously only offered crop price futures funds, tracking the prices of wheat, sugarcane, corn, and soybeans. However, the SEC is still holding off on approving the Grayscale Spot Bitcoin ETF, even with investors lobbying and the cryptocurrency asset management firm threatening that it may sue the SEC. Bitcoin futures speculate on the asset's price, but a spot Bitcoin ETF will trade the coin at its current price, offering more exposure to investors. While the SEC has approved 3 other futures ETF for Bitcoin, there is a slight difference in the latest approval. The other 3 were approved under the Investment Company Act of 1940, while the latest has been approved under the Securities Act of 1933. What's the difference between the 2 acts? According to the SEC, the 1940 Act provides more and stronger consumer protections than the 1933 Act. Last year, the Commission said that the funds regulated under the 1940 Act provide consumer protection rules regarding liquidity, valuation, and custody of assets and funds, all of which are not provided in the 1933 Act. As a result, this is the first time the regulator has approved a Bitcoin futures funder under the Second Act. With the switch from the 1940 Act to the 1933 Act, the Commission seems to be developing more trust for Bitcoin ETF funds even with lesser consumer protection guidance. Grayscale CEO Michael Saylor hopes the change will signify that the Commission is changing its outlook towards spot Bitcoin ETF. In a long Twitter thread, he stipulated reasons why he believes the SEC is weakening its own argument against spot Bitcoin ETF. Here are some of the CEO tweets. First, the SEC has a weaker argument that the different protections and standards that apply to the 1940 Act versus the 1933 Act are reasons for denying spot Bitcoin ETF despite using that argument for every single spot Bitcoin ETF denial since Bitcoin futures ETF started trading. Second, the SEC made interesting commentary in the Contrarian approval, particularly concerning what it refers to as regulated markets of significant size. Historically, the SEC asserted that the absence of regulated markets of significant size related to the underlying assets, namely Bitcoin, was a critical, missing element to the approval of a spot Bitcoin ETF. Therefore, if the SEC is comfortable with the Bitcoin futures ETF, they must also be comfortable with the spot Bitcoin ETF. And they can no longer justifiably cite the 1940 Act as being the differentiating factor. Hopefully, the continued pressure from investors in Grayscale will spur the approval of the first spot Bitcoin ETF in the United States and open the floodgates for many more. When this happens, more institutional investors will get into the space, and we know how great that will be for prices. What do you think about Cathie Wood's interview, and how soon do you think the SEC will cave and approve its first spot Bitcoin ETF? Let us know your thought and observations in the comments section below. Also, remember to hit the like button and subscribe to the channel. Thanks for watching.